So basically, I mean, this is a pandemic, and so everything about this is fast. So both the decline and the rebound. And so if you look at, we looked at about 18 different indicators. If you look at the speed of improvement relative to past recessions, it's basically just unlike anything we've seen. It's not just the labor market, it's everything. And so you go from what we term early cycle, sort of in the spring of last year, to late cycle by, I think, the fourth quarter of this year. Late cycle being not, on the verge of recession, but being back at sort of the pre-pandemic trend. So not the pre-pandemic level, but the pre-pandemic trend. And so that basically is a different way of saying you're starting to run out of labor market slack by the time you get to the end of this year.
What does that mean for wages? And how concerned are you about a wage price spiral given the speed of the recovery that we've seen?
Yeah, so not at all concerned. Now, obviously, we're going to get wage growth. So we have about 100 basis points of wage growth built into our U.S. forecast, 80 basis points in Europe. The rule of thumb is if you push down your unemployment rate by about 100 basis points, on average, across the whole universe that we cover, you get about 45, 50 basis points of wages, but you only get about 15 basis points of prices. The wage price spiral argument is a little bit different. It's sort of saying, conditional on getting those wage increases, or even more than we expect, what does that then subsequently trigger in additional price growth? And there the numbers are just really small. So conditional on getting 100 basis points of wages, you get maybe 4 basis points of prices. So, I think it's just a red herring. So I worry much more about being wrong on bottlenecks than I do about wage growth, just because if you emerge from the bottleneck environment that we're currently in, and you go back to a competitive goods environment where supply scales up to demand, then a lot of those wage pressures are going to have to be absorbed in margins. And that's, I think, the environment we're going into in the second half of this year.
In terms of those supply bottlenecks, what is your expectation for when we reach peak bottleneck, and have we reached that point already?
I think we've reached it already, and I think that's actually somewhere where we're, I think, a bit off consensus. Is I think the general, if there is a consensus view going into 2022, I think it's that people think the bottlenecks are here for at least another 9, 12 months, maybe even longer. And certainly I think that's crept into the central bank communication. But actually, if you look at sort of the news flow over the last month or so, including over the Christmas period, I think there's, we think it's another 3, 4 months. And